Hello there! Time to look at energy, specifically uranium, crude oil and natural gas. Welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Talking about energy, let's start with natural gas. Usually natural gas cycles last for about 4 months. Zooming out, we see these cycles, and cycle lows usually come with a break below the 50-day moving average and a drop in RSI by well over 20 points to slice down through at least the neutral level. Zooming into what's been going on recently in natural gas, there is a bit of a question over here in late August whether we've seen a short cycle lasting into late August, or are we in an extended cycle lasting all the way since early June. Back in late August, we do see a break below the 50-day moving average and RSI has dropped by more than 20 points to slice down through the neutral level, but that decline was still relatively mild. Plus, some of the previous cycles before that were relatively short, and usually to average out the duration, to bring it back towards the typical duration, after a series of short cycles we do see a bit of an extended cycle. In either case, natural gas is dropping down into the cycle low right now, but I'm afraid that the drop didn't finish with yesterday's low on the 29th of November. What I expect going forward is a bit of a bounce from this support zone of the 200-day moving average, perhaps retest the middle of the Bollinger Bands before going us a repeated poke below those wide Bollinger Bands, which are again usually signs of an impending cycle low. Looking at seasonality, it generally agrees with our expectation. As you see, December is often a very red month for natural gas. This is seasonality since 2015, since the end of that bear market in commodities. So from the perspective of seasonality, natural gas is somewhat tricky right now, although it has become much cheaper over the last few weeks. Hence, as I mentioned, perhaps a short-term bounce, perhaps a retest of the 50-day moving average before continued decline down into that true cycle low, which might come with even more severely depressed sentiment on natural gas. Hence, looking at market optimism index, we see that there are usually good times and hard times in natural gas markets. Good times are the cycle lows finish with the optics somewhere below the level of 40. We see good times in the middle of this chart taking place all through the second half of 2020, during 2021 and the first half of 2022. Now talking about the hard times, that's when cycle lows in natural gas finish with the market sentiment below the level of 30, as in the left side of the chart in 2019 and first half of 2020. Currently, again, we are in hard times for natural gas, and while the sentiment has dropped all the way to 28 right now, hence perhaps a bit of a bounce is due. Beyond that short-term bounce, perhaps a short-term play, you probably want to wait a little to see how seasonality affects the natural gas market. Next, moving on to crude oil, let's zoom in a little bit. Last time we talked about crude oil was when it was testing this 200-day moving average, and as I mentioned back then, I was expecting a bit of an inverse head and shoulders. That's exactly what crude oil has given us so far. Usually inverse head and shoulders is a bit of a bullish sign, so I expect continuation up into a new cycle. After all, RSI has cooled down significantly from overbought levels at 77, coming down nearly into oversold recently at around 31. That is a significant enough decline for a cycle low. And this cycle has been going on for 141 days, which is perhaps just a little bit shorter than the usual 157 days all the way since mid-2017. Looking at market sentiment in crude oil, again, just like the cycles themselves, in the very longer term, sentiment also cycles through the hard times and the good times. Again, during the hard times for crude oil, cycle lows usually come with this sentiment dropping all the way down below the level of 40. And during the good times, cycle lows usually come with this sentiment just dropping below the level of 50. And as I mentioned to the members at myfinanceteacher.org in a recent video, I do think that crude oil is entering a new period of good times. Hence, the recent drop in sentiment down to low 40s is likely enough for a cycle low, meaning that price is likely to roll into a rallying stage of a new cycle. By the way, seasonality does agree with our expectations. Again, looking at seasonality since 2015, we see that crude oil usually does give us a bit of a low anywhere around late November or mid-December. So a bit of a softness in crude oil might continue for another 1 or 2 weeks before a continuation of a rally again into the new cycle. And lastly, but perhaps most excitingly, let's have a look at uranium, as it has been rallying significantly over the last half a year or so. Zooming out a little, usually uranium cycles again give us a cycle low breaking below the 50-day moving average and poking a few times below relatively wide Bollinger Bands. Additionally, these swings in the cycles also translate to significant swings over here on RSI. Zooming in a little bit, there is a bit of a question whether we've seen a cycle low on uranium in October, but it didn't come close to testing this 50-day moving average. Hence, the cycle is perhaps continuing, lasting for 141 days currently. Usually, the cycles last for around 5 months. So while most of the market is now excited about uranium, perhaps you might want to be somewhat cautious. Wasn't it Warren Buffett who said, "Be fearful when everyone is greedy"? So while I am very bullish on uranium in the longer term over the next several years, in the shorter term over the next few weeks, perhaps we are due for a bit of a cool down into the cycle low, a noticeable break below the 50-day moving average before we can continue rallying into a new cycle. Hence, with these expectations, as I showed in the model portfolio for the members at myfinancesteacher.org, looking at uranium producers, I did mention these resistance and support zones which go back into 2022. All through September, I was reducing my allocation in Uranium Miners as they were approaching this resistance, and I was fortunate enough to reload into those positions again as they were approaching this support zone. All of that again is shown in the model portfolio for the members at myfinancesteacher.org. At the moment though, with a significant decline yesterday, and as it aligns pretty well with my expectations for the uranium cycles, perhaps it's not a bad idea to become cautious in uranium miners over a short term. So while we see that pre-market price is slightly above yesterday's close, I might actually reduce my position size perhaps over the next few days, expecting a correction down below the 50-day moving average. But again, as I mentioned, since I am bullish on uranium in the longer term, an important point is to make sure to reload back into those positions near the cycle low to ride the next rally into the next cycle. And in expectation of that cycle low, you might want to look for those signs that I've mentioned that usually accompany these declines into the cycle lows. For much more details and data on when the cycle lows are approaching, giving us some of that buying opportunity, join us at myfinancesteacher.org. Simply scroll down and click this Join Now button. The membership is only $10 a month, which is basically a couple of beers, but the price for new members will go up in January. So if you want to be grandfathered at the current price, join us, do it now. Have a nice day, bye bye.